Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to provide an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the Cyber Monday sale on Into the Cryptoverse Premium at intothecryptoverse.com. Links in the description below, and you can get 50% off your first month by entering the code Cyber Monday at checkout. Let's go ahead and jump in. So, Bitcoin has clearly had a significant move well above the bull market support band. However, be that as it may, as we were recently talking about, if you were to go look at the short-term bubble risk, which is essentially just the extension from the 20-week moving average, it's not that dissimilar from what we saw back over here. In fact, in January, you can see the same. We essentially reached that same extension from the 20-week moving average as we did over here. In January, we reached the same level again in February. In March, we went even higher, but this same level was just reached here in November. So pretty similar extension from the 20-week moving average. Now, again, we did come back down to retest the 20-week SMA eventually. And over here in August or September, we actually fell below it. And we said that we were likely going to fall below it over here in August and September. So, we were sort of anticipating that move. But admittedly, I was not expecting this strong of a move back above the bull market support band at this point in the pre-halving year. But now that it's here, we should at least talk about, where, what are likely outcomes to come next, what would be levels to look at if we were to get a pullback. Same old thing that we, usually talk about in the bull market support band videos. Right now, the 20-week SMA is now above 30K, right? So it's about 30K, 30.3K. The 21-week EMA is about 31.5K. So they've moved up quite a lot in a relatively short period of time. And we can actually extend these out, sort of project them out based on the current prices, and also maybe throw on the 8-week moving average as well. And if you do that, you get something that looks like this. Okay, this is essentially if the price were to stay constant. Okay, now you can see how the 20-week will essentially slowly grind up, right? And I mean, it makes sense because what you're essentially doing is your if you go back 20 weeks ago, you're slowly replacing, prices down here with prices up here, right? Slowly, of course. But as you look at this, you can see that you have the 20-week SMA that'll slowly start to level off, assuming price doesn't make any drastic move. The 21-week EMA as well, but look at the 8-week moving average. Now, the 8-week moving average can come in handy. We talked some about the 8-week moving average. You might not remember it, but we did previously talk about it. Back over here, right? The 8-week moving average was finding support at various times during some of these moves back in 2020 and 2021. But in recent months, you'll see that the 8-week moving average was also sort of a spot where we got a bounce in here in February, and then also here in April. Okay, so, and even over here, you can see once we got below the 8-week, we were sort of above the 20-week, but below the 8-week for just a couple of weeks. So that 8-week moving average might come in handy. If you're not familiar or if you're not sure what the price is on the 8-week, it currently is around 34.5K. 34.5K. So if Bitcoin were to fall back to that 8-week moving average this week, which again, there's no guarantee as to if it's going to happen this week or not, but if it were, from the current price, it would correspond to about a 6 or 7% move to the downside, which would be a substantial move. And the reason why that would be and again, no guarantee that it happens this week. You can see that Bitcoin has been slowly grinding higher. We've had some pretty long wicks to the downside that ultimately did not materialize in anything more than a wick. But if you look at this on a shorter time frame, and I'll leave the moving averages up. you can see that, Bitcoin has just been slowly grinding higher here, right? Slowly but surely moving up. And so, if this were to break, right? If this were to break this trend line that Bitcoin has been holding, we've had a couple of fake outs below. If you actually get a weekly close, or if you get a daily closes below it, if you get multiple daily closes below it, then it's that 8-week moving average that might come into play. That would be your. I would assume that would be the first major area that Bitcoin would at least try to find support if it were to break down, right? Now, of course, there's all sorts of ways you could look at this. I guess the way that you look at it will ultimately depend on if you're a bull or a bear. I do know that we're sort of trained to see what we want to see. If you're looking for it to break out, then you clearly would not want this trend line to break, right? If this trend line were to break, it would sort of signify that there is a complete change in the trend, because for the long time we've just seen Bitcoin slowly grind up. And this isn't that unfamiliar. It's not, I've seen some people say, well, this hasn't happened before. Right? What is this? Right? Well, we've actually seen it before, and we've actually seen it this year. Maybe it didn't last quite as long, but there have been periods, right, where Bitcoin just sort of slowly went higher, right? Slowly but surely, it went higher. And in this case over here, it actually broke up and then broke down. We also saw a very similar thing back over here, right? It was just slowly grinding higher for a while, and then it just eventually broke down, right? So, these patterns that we're looking at, they're not that different from some of the price action we've seen. In fact, this move over here, just to get to where it broke out, took about 24 days. And then that final high did not come. That local high did not come until 28 days after we entered into this zone. Here, from really when we entered into this zone or so, it's been a little over a month, right? A little over a month or so. Not too long, but certainly long enough to make both bulls and bears go back and forth in their head and wonder what's really going on, right? Like, is it building up to something? Or is it about to break down? And of course, you'll find all sorts of opinions on Twitter. But I have found in the past that it's these slow moves where they take place over 1 to 2 months that really test people, because whether you're bullish or bearish, it can be easy to sort of test those convictions when the price isn't moving that much, or if it's just moving very, very, very slowly. So do consider that. A lot of the other moving averages that you might look at are still, you do have the 20-day SMA, which, is kind of not that relevant with Bitcoin. There's been plenty of times where it's sort of had fake outs below it and it didn't really mean anything. But if you're curious where that is, it's currently sitting around 37K. So this has been acting as support. We had a fake out below it right here. If you get another daily close below it, it might be a sign that Bitcoin needs a larger pullback. But I imagine the 50-day is well below us, currently coming in at below $34,000. The 100-day is all the way down at 30K, and then you have the 200-day at less than 30K, right? It's all the way down at 29K. So this area over here is something that we've talked about as well in terms of what Bitcoin has historically done after breaking through the 100-week, right? So a lot of times after Bitcoin, breaks through 100-week, eventually it tends to come back down to it, right? You can see that happen last cycle. It also happened the cycle before that as well, right? Like once it broke through the 100-week moving average, a month or two later, we came back down and held it as support. So you can see it held as support in early 2016. It sort of held as support. It held as support here in late 2019, and we sort of flirted with it a little bit in early 2020. So I think the interesting thing here is that in both of the prior cycles, we were at the 100-week moving average in January of the halving year, right? So in January of 2016, Bitcoin was at the 100-week moving average. In January of 2020, Bitcoin was at the 100-week moving average. And so then the question is well, we're only a month and a half away. Will Bitcoin also find itself at the 100-week moving average in January? And again, even if we do find ourselves there, it doesn't mean that it has to hold as support. You can see that last cycle we held it, but then eventually it failed. And the cycle before that, we held it. And once we held it, Bitcoin was off to the races, right? So, I mean, you don't really have many examples. In this example over here, right, it never even, after it broke through it, it never really went back down to it, but it never went much below it in the first place, okay? So, we've talked a lot about Bitcoin price action and how things can occur with Bitcoin that really negatively can affect the altcoin market. And so, one thing to consider is that if Bitcoin does get some type of pullback, it likely would not be that great, right, for the altcoin market, okay? The altcoin market does really well when Bitcoin's just trending above its bull market support band and going sideways above it. But if Bitcoin gets a larger correction back down, the altcoin market can show weakness. Now, I mean, look, all sorts of people have opinions right now, and some people are calling for new all-time highs before the end of the year. I mean, I'm not saying it's impossible, but we are quickly running out of time for that. But I think one thing to consider as well is that sort of the nature of these moves by Bitcoin. If you look at what we've been doing, you have this low to this low, 15 weeks. This one to this one, 14 weeks. Here to here is 13 weeks, right? So 13 weeks from this level here puts you out in December, right? But that's also the shortest time frame that we've seen over the last year. If you go further out, like 14, let's go to 15 weeks, it puts you like late December, potentially going into early January, which is interesting. If you remember when we said going into early January, what would that correspond to? Early January has historically corresponded to where Bitcoin is at the 100-week moving average, right? You can see, I mean, look, guys, it's only n equals 2. Not asking you to take it to the bank. They're sure as hell not going to cash it in. But that's where we were in January 2016. That's where we were in January 2020. And, here we are, right? Everyone's already convinced we're going to blast through. And I'm not saying we can't move higher, but what if there is some type of larger correction going into sort of like late December, early January? And I know what a lot of people are thinking, right? They're thinking, well, like, how could that be? Like, how could that happen? I mean, you're going to have a SPY ETF, all this other stuff. I mean, I don't know. It's just what the chart says is a potential outcome. I don't know what news will accompany it. It could be that, there's fear that the SPY ETF might not happen in January. And again, that doesn't mean that it still doesn't happen, right? There could just be fear that it doesn't happen. There's been a lot going on recently in the Cryptoverse, and I tend not to sort of insert myself into that drama. But there's all sorts of reasons why price action can do the opposite of what a lot of people are expecting at any time, right? At any time. And in terms of whether we hold the 100-week moving average or not, because I mean, again, the assumption is that at some point we'll likely test it, right? I think arguing about will we hold it or not, in my opinion, will very much depend on if we get a recession or not, right? We only have a couple of examples to really look at, right? We have 2 examples, and over here we had a recession scare, right? The stock market did go down in 2016, but Bitcoin held it at the 100-week. And then over here, we held it, seemed like we were off to the races, right? I mean, everyone was bull posting, and then it collapsed, well below it. In sort of what I've dubbed before as the secondary scare, and you know, the secondary scare is something that we've just seen the last two cycles, right? Like where you put in your major low in both cycles, and then at some point in the future, right, before the halving, at least what's what these two data points show, but at some point before the halving, you get a retest of it, or you come pretty close. You come pretty close. So will that happen again is the question. You know, I've been under the opinion for a long time that Bitcoin dominance, right? Bitcoin dominance needs to go up. And that, you know, like things like Ether Bitcoin should break down and all this other stuff. It sort of seems like the missing piece to the puzzle to some degree. But I also am aware that putting too much confidence in something like that play out could also be dangerous, right? As I've said before, right? DCA is probably going to be the best strategy over the long haul. With what I did last cycle, right? I mean, I just DCA'd through this entire thing, and I didn't really much care. I did sell a little bit up here, but not a lot. I mean, admittedly, it was not a lot at all because the risk levels weren't that high, but it was a tiny amount. It made me feel good about myself, but it really wasn't that much. And then we eventually came all the way back down here, and this didn't occur until March of the halving year. You know, this move here occurred in August of the pre-halving year, right? So you have one example where it was August, one example where it was March. I guess if you split the difference, that puts you, I guess, December. But even then, I mean, if there is a correction, right? If there is any type of correction in December, I think you look first for that 8-week moving average at around 34.5, right? Below that, it's the bull market support band at around 30. And then eventually you have that 100-week moving average, which is below 30K, right? And that'll be a really big test, assuming we get it. I mean, that's going to be a really big test. And I mean, it could come as early as 5 or 6 weeks from now. So that will be an important level to watch. And again, whether we hold it or not will be dependent on if we get a recession or if the Fed miraculously engineers the relatively elusive soft landing, which has only occurred a handful of times in history, but there is some precedent for it, right? It's not like it's never happened. It's just not something that frequently happens. And, you know, in terms of like thinking like, well, what could possibly cause Bitcoin to drop? I mean, you can't even go on Twitter anymore without, I mean, it's up only, right? It's up only essentially. But I think the main risks are this, right? I think the main risk is sort of the labor market. It's never the second scare that typically happens for Bitcoin at this point in the cycle, right? So like these two scares here, right? Like this one and this one. They were never really crypto related, right? Like it wasn't a crypto thing. You can look at this bear market right here and come up with 1,000 reasons why it was crypto related, right? You have the collapse of FTX, Luna, Celsius, BlockFi, Voyage. I mean, the list goes on and on and on. And you can find 1,000 different reasons why this bear market was very much crypto specific. This collapse that Bitcoin had. This was a 70-something% drop, like a 77-78% drop, which is not something you're going to see in like the S&P 500, right? So you can definitely argue that these sorts of drops are crypto specific, right? It's because there's so much dubious speculation, right, in the post-halving years where everything's going crazy, that it all has to get wiped out, 70, 80, and 85% drops in the span of a year, right? And that's what typically happens. You often will get something like this, right? Where the market just chops around for a while. And usually, doesn't mean we're going to get it this time, but usually what has happened is you get some final scare that makes everyone worried that they got all hyped up for nothing, right? And it's typically not a crypto thing that does it. It doesn't mean that it can't be a crypto thing, right? Like one of the artifacts of tighter monetary policy is that it exposes zombie companies, right? It exposes the companies that are the weakest. If you think about it, what were the companies that went under first? They're probably the companies, and I'm not gonna go through which one specifically, but if you think about in the order at which things fell, right? Like think back to 2022. Think back into the order of every single company that went down. The way I think about it is the ones that go down first were the highest risk, right? The zombie companies, the companies that were only really profitable because of a low interest rate environment and excessive speculation. Okay, those go under first. But the longer that tightening continues, the companies that appeared okay, then they start to show cracks, right? But then the longer it goes on, right, as the months drag by, the longer it goes on, more and more companies start to show cracks, right? Now, eventually, the idea is we get to the point where some of the juggernauts, right? I'm not talking about crypto, right? But just some of the juggernauts in general, start to show cracks, right? And that's what usually leads to a Fed pivot. I mean, the Fed doesn't pivot because, some random company you've never heard of that says, specialized in crypto, which is still very much like, it's not a space that a lot of people are even interested in, to be completely honest, in the grand scheme of, everyone in the world. They don't care about that, right? But you get some of the bigger companies showing weakness, they care more about that sort of stuff. So again, what you normally have is you have your bear market year. You then have this period where the market chops around a lot. I've characterized it before as around pre-halving years, about half up and half down. This year, it hasn't been as much down so far. Doesn't mean that it can't. I mean, the year isn't over, but it hasn't been as much as previous years. But if you were to look at the year-to-date ROI of Bitcoin, it's actually like it's not that different from what we saw in 2019. In fact, if you look at year-to-date ROI of Bitcoin compared to 2019, we're actually above where we were in 2019. And if you imagine if we were to get this drop into the end of the year, that would essentially put you right at these prior local highs, right? 31K, 32K, maybe even 30K or 29K, which would again correspond to that 100-week moving average in the early part of the halving year, right? Like late December of the pre-halving year or January of the halving year. And whether it holds or not will be dependent on in my opinion, right, will be dependent on if there's a recession. Now, even if there is a recession, it'll be blamed on something, right? Like, I mean, no one's just going to say, oh, well, it's because of the recession, right? They'll say like, oh, well, it's because this thing fell or this thing collapsed that no one was thinking about. Like, it'll be something, and that'll be the reason, that'll be the explanation for it. But it's always been something macro related. At least my opinion. I mean, even though that's my opinion, I'm sure you could go back and find something, sort of blame it on something else. But these secondary drops that have occurred has tended to be something macro related. So we'll see if it's macro related or not. And if it's something collapsing, then even then, I mean, it would still likely be macro related. I mean, brought on by a higher interest rate environment. So sort of figure out like which companies rise to the top and thrive, and which ones fade into obscurity because they could not handle a higher interest rate environment and tighter monetary policy. So that's where we are right now. With Bitcoin trying to break above 38K, not really doing so yet. If we can't do so and the buyers just get exhausted, then we discuss the different levels to look at, and we'll see what happens going into the end of the year. We'll see if any type of second scare occurs or not, and we'll also find out if we'll have sort of 3 times in a row here of sort of back testing that 100-week SMA in January of the halving year. And what's interesting is in both cases it held, right? In both cases it held initially, right? But over here, while it more or less held, I mean, we kind of had a little bit of movement below it. We got this move. This one, it was all good. So that'll be, I think, the big test coming to us probably within the next 4 to 8 weeks or so. So make sure you guys tune in for that. And again, guys, we do have the Cyber Monday sale on Into the Cryptoverse Premium. We've got thousands of charts, not only on crypto, also on the macroverse, on stocks, on commodity. I mean, we've got a lot of stuff. We've been building it out for the last several years. Make sure you guys check it out. Tons of charts, tons of tools that you can use. And again, if you use the code Cyber Monday at checkout, you can get 50% off your first month. Okay, and we already have it on sale too. So make sure you guys check that out. Link in the description below. I'll also put it in the pinned comment as well. So go check that out. Subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.